Hello and welcome to Energy Insights, your channel for understanding the forces shaping global energy markets. Today we are covering Gulf shipping threats, what they mean for global energy trade. So we are looking at a critical issue that could impact global oil and LNG supply chains, the growing security threats to shipping in the Persian Gulf, and how marine insurances are responding. While the tankers and LNG carriers move billions of dollars worth of energy every day, there's one industry quietly keeping this trade running, that's the marine insurance. But as geopolitical risks arise in the Gulf, insurers are now facing a new and complex channel. Let's break it down into 4 segments. So first, under the segment 1, we are covering why the Gulf matters for global energy. The Persian Gulf and the Strait of Hormuz are among the most strategic energy corridors in the world. Every day, around 1/5 of the global oil supply passes through this narrow waterway. In addition, large volumes of LNG from Qatar and the UAE, along with refined petroleum products, are shipped through this route to markets in Asia, Europe, and beyond. This means that any disruption to the Gulf shipping has immediate consequences for global energy markets. Recently, however, rising the geopolitical tensions in the region have created serious risks for the ships operating in these waters. Attacks involving drones, missiles, and other advanced threats have challenged the security landscape for marine trade. For oil tankers and LNG carriers transporting energy cargoes, these evolving threats are creating new operational and financial challenges. So similarly, under the segment 2, we are looking at the insurance challenge for energy shipments in particular. So for any oil tankers or LNG carrier to operate internationally, insurance is essential. Without insurance coverage, ships cannot obtain financing, cargo contracts, or part access. That's why marine insurances play a central role in global energy supply chain. However, the new threats emerging in the Gulf, including drone attacks and long-range missiles risks, are forcing insurers to rethink how they evaluate maritime risk. Traditionally, insurers focused on threats such as piracy or regional conflicts, but modern warfare technologies are changing the games. As a result, insurers are reassessing risk levels for vessels transporting crude oil, LNG, and refined products to the region. This reassessment has already pushed war risk insurance premiums significantly higher, increasing the cost of moving energy cargoes through Gulf routes. While under the segment 3, we are covering the impact on the oil and LNG markets in particular. So higher insurance costs directly translate into a higher shipping cost for energy commodities. For example, when insurers increasing premiums for the tankers operating in high-risk zones, ship owners pass these costs on cargo owners, including oil producers, LNG traders, and refiners. This can raise the delivered cost of energy in importing markets. In significant cases, insurers restrict coverage altogether. Ships may avoid the region entirely. Such disruptions could show, and similarly, it slowed down the movement of the million of barrels of oil per day, as well as large LNG shipments destined for the Asia and Europe. For energy markets already dealing with the supply uncertainties, even small disruptions in the Gulf shipping can cause price volatility in the crude oil and the LNG markets. That's why traders and governments and other energy companies are closely monitoring the situation. Now, under the segment 4, we are looking to how insurers are responding. Despite the risks, energy trade through the Gulf cannot simply stop. Therefore, marine insurers they are now planning to explore several solutions to manage the evolving risk environment. One possible approach is the government-backed insurance support, where states help provide coverage for the ships operating in the high-risk regions. Another strategy is the use of short and more flexible war risk insurance contracts, allowing insurers to adjust coverage quickly as security conditions change. At the same time, shipping companies and insurers are investing in better risk monitoring systems, including satellite tracking, intelligence sharing, and marine security coordination. These measures aim to ensure that the energy shipments, particularly oil and LNG cargoes, can continue moving safely through one of the world's most important energy corridor. So, looking into these, now we have to conclude this. Now, in the last segment of this episode, we have to conclude the situation on the basis of these above various dimensions. So the situation in the Gulf highlights an important reality about the energy markets. Energy trade does not depend only on the production and demand, it also depends on the secure and insurable shipping routes. As geopolitical risks evolve, marine insurers will play a crucial role in determining how smoothly oil, LNG, and refining projects move across the world. For now, the global energy market is switching, and it's now in the last segment of this episode, we have to conclude the situation on the basis of these above dimensions. So the situation in the Gulf highlights an important reality about the global energy markets. Energy trade does not depend only on production and demand, it also depends on secure and insurable shipping routes. As geopolitical risks evolve, marine insurers will play a crucial role in determining how smoothly oil, LNG, and refined projects move across the world. For now, the global energy market is switching closely, and now the